Welcome back, YouTube. So in today's video, we're going to take a look here at the CPI numbers. I know I haven't done a state of the market inflation report video in a while, but this is very important because we have now set a trend for the second month in a row. We have come under the expectations that for our inflation levels, and we're also coming in a little bit lower on the actual month over month at least suggested reports. And this is the CPI reading probability report from JP Morgan, and it pretty much gives like it gave the probability of the inflation falling within certain sectors, and also the anticipation for the S&P 500. And as you know, based off the title and the information today, if you haven't heard, we came in at 7.1. So they had a 15% probability, which means that we came in again lower. More than likely, we were supposed to come in between 7.2 and 7.4, which would have put us pretty much at a parallel with last month. But again, we're having confirmation that things are kind of cooling off. So the expectation from JP Morgan is around a 4 to 5% increase in the S&P 500. And we did see a huge run today. And of course, we saw a sell-off when the market opened. So things kind of cooled off. And I believe that was just people that had long-term calls and calls from like last week and stuff. They kind of took profits, and I was kind of able to help push the market down. But overall, Jerome Powell speaks tomorrow, and the real kicker is he kind of going to confirm this by doing a couple things, right? So another way that this can kind of solidify things are cooling off is if he backs off this approach and we get the 0.50 basis point hike. I do not think he's going to go 0.25. I've seen a number of articles saying that, and yes, as far as for bullishness in the market, yes, that would send us parabolic. And as far as for the market, it's probably even in crypto as well. But I do not see that happening. I do believe that our next meeting is in February, and we're going to be kind of scheduling to at least get another 0.75 to get up with the, I think, 4.5 expected rate. So that could mean a 0.50 this time, and then a 0.25 and a 0.25 by March. So I do not see him doing a 0.25 or even just a 0.25 and a 0.25 as far as splitting it. I think he's kind of going to stick to his guns with the 0.50 for this month. And worst case scenario, not even worst case, I don't believe that he's going to pause either. I know that was kind of like a topic for last month, but even if he pauses, I don't believe it'll be this month. I believe that's something we could probably see in like February. We could see like a pause, but overall, we should be seeing a U-turn sometime within, I say, late first quarter or probably early second quarter of next year. Because what we're going to do is we're going to start to overlap because these numbers, these inflation reports, and I know it's weird how they calculate them, but they only count them for year over year. So we're going to start coming up against some of these higher inflation reports that we had this year, next year, if that makes sense, right? So we're going to start coming up against some of those 6.3s and 7.1s and all that kind of stuff like that from last year. And we're going to have to compare it to the current rate of that month. And this is obviously going to hint that we kind of need to pump the brakes on these BP hikes, and we could possibly see a U-turn. So is this the end of the bear market? I'd say we're probably, I'll say maybe about 3 or 4 months from a hard U-turn from the Fed. We'll see tomorrow, because I think the market rallying today was just hopium off of what Powell should do tomorrow, which, and that whole narrative was being pushed at 0.25. I don't think that's going to happen. And another thing I think people have to keep in mind is, I'm not saying that the Fed is incompetent, but they have missed the mark more than 50% of the time. I think it's something like 68% over the last year when it comes to dealing with inflation. So what could throw a monkey wrench in this? Obviously, if we get a tick up in inflation, he does a pause, and then we get a tick up in inflation. We come in a little higher on the next reading, and overall, we can kind of I don't think we're going to have necessarily a smooth landing, but we also kind of have to keep in mind that the data and stuff that we're seeing is there's a little bit of lagging indicators, right? So the threat of an inflation or rates and stuff coming down hard next year is very real. Just kind of like printing the money in like 2020, where we started dealing with inflation literally like a year and a half later, roughly. So it's not an immediate factor here. So if there's still a high probability for not inflation, but a harsh recession next year. But what Powell does, more importantly, in this tomorrow, is going to determine what level that can be, right? So if he is, staying on the gas and saying that, okay, we're still not pausing, we're going to do a 0.50 and a 0.50 or something like that, that's not going to be very bullish. That's kind of going to be looked at more as overkill and can possibly hurt the markets. But I do believe we're going to get a 0.50 tomorrow, and that'll kind of be able to be a positive push in the market. And this can kind of hint at a Fed U-turn. And we could start charting out possibly like the end of the bear run. And this in alignment with like the crypto run and stuff like that, starting like late next year and starting the ascend onto the next bull run. That kind of makes sense. If this happens like second quarter and we start like that mellowing period and we kind of are able to smooth things out and get like that ascend toward like third, fourth quarter of next year, that'll kind of put us on track with what history says we should be as far as for cycles. So that's just kind of something to kind of keep an eye on over like the next 6 months or so. But overall, what we're looking for is obviously the year over year and to see if we can do a three-peat with the CPI numbers. So a three-peat will certainly be a much stronger trend on the downward side as far as for whether or not we are going to have a U-turn early second quarter. But overall, with us coming in 2 consecutive months and us beating the month-over-month expectations, this is very bullish as far as for us being toward the bottom. So I think this is going to be great overall for the market. And so for people who have been shorting the market and have been making a lot of money off of puts, just be careful here and make sure you're paying attention to the signs and stuff like that, because the market is hardwired to go up. So that's just kind of something you're going to have to keep in mind when you're playing the games here, especially tomorrow. We'll see what Powell says. We don't know what Powell says. The market running today was, in my opinion, hopium. But we both know that, at least all of us know that Powell has at least the say so as far as to where the market's going to go with these inflation rates. So just tune in tomorrow. The numbers come out, I believe, at 2 p.m. and Powell speaks at 2:30. So that'll be something to kind of keep your ears on and keep an eye on the market around that time as well. So that is my update on the inflation, CPI numbers, all that kind of good stuff, what I'm expecting, the time frames I'm expecting. If you found value in this video, please like it, subscribe to the channel, and don't forget to check out Moomoo, where you can get 15 free stocks by opening an account with them. I have a link for them in the description section. I appreciate all of you, and I will see you in the next video.